Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the 85th Annual STA Market Structure Conference in the nation's capital, Washington, D.C. Joining me on set is Chaparro. He's the Senior Correspondent over at The Block, and I would venture to say the media cryptocurrency king. We're just all over the place with that.
I wouldn't say that.
Well, close to it.
Thanks for having me.
It's awesome to have you on set with me again. I think one of the key themes, what's been interesting at STA this year, is the talk was all about crypto. It wasn't like that in years past.
I mean, the energy, it's not even just conversations happening, on the side or people talking about what they might have read in the news the other day. It's being discussed by the folks on the panels. Mm-hmm. They're diving into the topics, exploring what the latest trends are as it pertains to market structure and trading. Mm-hmm. So I think, and you were saying this earlier before we went on live, it really is proof that this asset class is working its way into Wall Street and working its way into its own institutionalization.
Right. It's really interesting to hear just how much institutional language is happening at this conference. I think it's a super exciting thing. Beyond that, what are some of the key trends that you focus on in your reporting? What are you most excited about?
I mean, well, the first thing that I noticed when I came here was just the assault of Wall Street talent by the crypto world. You had, Jonathan Kellner, former CEO of Internet. He's here, obviously. If you saw my report, you know that he went over to Coinbase to lead institutional sales and support. You have Salman, who left IEX to join a company called CoinList to build out their ATS. He's here at the conference. And obviously, that aspect of it, getting Wall Street guys like Kellner, like Salman, who have built things in equities to sort of model, or rather take their expertise in trading to the crypto world and to sort of fix. I mean, the problems, are endless when we think about market structure, when we think about where the best price is, when we think about infrastructure, when we think about on-ramps for trading firms. I mean, a lot of these things haven't been built out yet, and that's why the need for this type of talent is so important, and that's why the assault is taking place. But at the same time, it's not, to take off the rose-film glasses for a second. The space is in a bear market, right? Mm-hmm. And so another topic of conversation that I've noticed happening are layoffs at certain firms. Are certain firms shutting?
You're seeing layoffs?
I mean, you totally are. I mean, Kraken laid off 10% of one of their support team, 10%. You have a few companies out in the UK that are losing some talent. Noble International, the bank that reportedly banked for Tether, the stablecoin, I mean, they're basically having a lot of issues. My own reporting and reporting from Bloomberg have suggested that they're basically working on a skeleton crew. So there is underpinning the talent migration, some other issues that you would see in any bear market. Firms that necessarily didn't prepare during the upswing at the end of 2017 are feeling some pressure. But at the same time, because the market's so new, there is so much opportunity for a lot of the guys and gals here, to join projects and build out the necessary infrastructure. I mean, you have Jamie Selway, who left ITG, the institutional broker, who's joined blockchain, cryptocurrency.
We also TD Ameritrade made the investment in ErisX yesterday. Not just TD, but a number of big players made that investment. So you have the BDs, you have the exchanges, and so forth. My question to you is, the equity markets, the fixed income markets, they are super evolved relative to the cryptocurrency market. Is it something you can plug and play to crypto and putting it into the equity model? I don't think it's one size fits all.
No, it's definitely not. And the question is, especially from a regulatory perspective, I was talking to someone who used to be a lawyer at JP Morgan, and the question is, you have the Howey test, right, which works for securities, and you have basically dictating things by law, by legislation. We haven't seen anything out of Congress, obviously, nothing. There's some bills that are being proposed and sort of thought about, and we're stuck in the middle right now.
Right.
Are some of these assets securities? Do they make sense with the Howey test as they do for equities? That's not necessarily clear, and so that's another thing hanging over the space when we think about, is it a one-size-fits-all? It's not, and that's part of the problem, in a sense.
All right. Well, thank you very much for joining me. ST, I have to convince you to get out to FIA with me. We'll see if we can get you out to Chicago.
I hope so.
Thanks for joining me. Thank you for joining me throughout the day. I'm Jill Malandrino, Global Market